Here to talk markets right now is Alicia Levine, head of investment strategy and equities at BNY Wealth. Good morning to you.
Good morning.
So what do you do with this whipsaw of a situation? It's not really a whipsaw anymore, or is it? I don't even know what to think.
Kind of like a mosh pit.
Mosh pit?
It's a mosh pit. Look, I mean, I think what we saw yesterday was how much the markets actually hate the tariffs in the morning, just hate the tariffs. But ultimately, we ended the day where we started the day, more or less, which is the market assuming...
With the tariffs back on.
With the tariffs back on.
So what does that say?
What it says is that the market's already priced in some endpoint of this, which is manageable, about 10% universal, and some others on China and some other sectoral, but manageable. And that's what the market's been telling us for the last few weeks. So...
So we're not worried about tariffs anymore.
I thought the market was like me. Be careful what you wish for. When the tariffs were gone, I was like, wait, we put in a lot of time and effort negotiating with 140 countries to try and get something. If they're going to be gone completely and everyone's going to walk away from negotiations, that didn't make me happy. The markets, before they were back on yesterday, the markets had already sold off. They didn't like that the tariffs were off. The market was already negative for the Dow.
Because because two things. What you said, because it's going to extend the negotiations. So there's no hammer on the negotiating partners here if this is going through the courts for a couple of months and they have to do other studies. And on top of that, the $200 billion a year in revenue that is going to offset the big, beautiful bill. Because if you add, I know the CBO is not going to take the tariff revenue, but it still offsets it. We all know that. It's math.
I'm not sure the market really hates them that much because oh my God, I'm going to say at the end of the day, but I really mean, I don't like that expression, but at the end of yesterday's trading session, the market was up even though the tariffs were back on.
Right.
Right?
Right, because there's going to be we all know, whatever the courts say, the administration has levers it can pull to keep some tariffs on. But it's not a disaster, and that's what we've been hearing from markets for the last few weeks, that we're not going into recession. The U.S. economy is strong enough to power through it.
We'll see inflation at 8:30.
And the softer data is moving up. So we had the sentiment data a couple of days ago, and the city surprise index for the U.S. is moving higher.
But then explain this. We have CEO confidence. You see some of the CEO confidence numbers down.
But consumer confidence was way up.
But then I saw on the buy now, pay later stuff, I don't know if you see Klarna and some of these other guys, they're having more defaults. So it's like this whipsaw of, is it good, is it bad? I don't know.
But we really haven't had a horrible data point, have we?
We have not had a horrible data point. Now,
economy-wise.
Yeah.
I would say, where would that come from? It could come from the labor market. I think that would be the most powerful.
Next Friday?
Possibly. Yeah. Could. Again, not there yet. And even the 240 on the new claims data yesterday, not a disaster. I think the market had expected something worse earlier.
Have you been surprised how quiet inflation is?
Very, very surprised.
What do we see today with the PCE?
So, look, I mean, it's, if it comes in as expected, we're lower by 10 basis points on core and headline, and it's in the mid-twos, right? So that's low enough. The expectation is that the full force of tariffs is not coming for another month or two. And if you extend the negotiations, the uncertainty extends. I'll just say this. The market priced it in long ago, right? It priced the downside in long ago. Okay. And so we don't think you see 4,800 again.
And what do you tell me? America is still exceptional?
America is still exceptional.
That's in you have a piece in Barron's?
I do. Okay, because the conversation about American exceptionalism being over and rest of world catching up as much better investing opportunities, it's a tactical trade. It's not structural strength. And when you're investing for the long term, where do you get return on investment? Where do you get the creation of deep capital markets and investor base? We are a country of capital providers and investors, which is simply not replicated elsewhere. That's why the best ideas come here. We create and incubate companies. And you can have a year where the rest of the world outperformed, but that is not for structural investing. You need to be fully diversified and not forget what brought the markets to where they were.
250 years next year. Don't forget that.
Don't forget.
Greatest,
there you go.
Greatest thing ever.